My name is Alex Thier, and welcome to ODI. I'm really thrilled to see that we have a packed house tonight. And you put revolution in the title, and I guess people show up. But it is remarkable to reflect on what a fascinating revolution the whole world has undergone since many of us began our careers. Many of the things that you'll be talking about tonight sounded more appropriate in sci-fi films or on Star Trek than the actual revolutions that are happening all across the world today, and particularly in the developing world. And so I think we're going to talk about some of those exciting things tonight. I'm just here to say welcome. Thanks to Simon Gill and his team for putting this fantastic event together. And I just want to very briefly introduce both our chair and our lead-off speaker. The first thing that I was going to say, though, is that, the change that has been happening around the world, welcome, has been so dramatic, and it feels like we are all constantly just trying to keep up with it in our own pockets, let alone in the work that we do around the world. And you have this simultaneous exciting and challenging thing that's going on. The exciting thing is that as digital technology spreads ever faster, ever wider than before, it opens up enormous opportunities, and it has broken down barriers. I'm sure one of the places you'll talk about today is Kenya, and we've all been amazed at the rapidity with which Kenya has adopted things like mobile money and shown far more quote-unquote advanced and wealthy countries how those things can be done quickly, and some of the advantages actually to not having some of the embedded infrastructure and all of that allows those things to happen, and that's enormously exciting. At the same time, to be realistic about it, there is a deep and in some ways deepening digital divide in the world, which makes some of the promise and excitement of all of these tools that much more challenging when you think about how much work needs to be done to really fulfill their promise. And so I think it's going to be a really interesting conversation. I'm just going to briefly introduce, but not welcome up, Soumaya Keynes, who is the economist and economics and trade correspondent. Welcome, Soumaya. And she also used to work at the Institute of Fiscal Studies, but we won't hold that against her. You're welcome here at ODI. But I'm going to introduce our first speaker tonight, who is Sanjeev Gupta. You'll see his name at the top of the list on this exciting new book. Sanjeev is the deputy director of the Fiscal Affairs Department at the IMF. If you look into the book, though, he's got many, many important things under his belt, both in terms of the work of the IMF, the number of missions that he's led around the world, but also being a fundamental, somewhat frightening contributor to the debate with over 150 papers and some 20-some co-edited volumes or edited volumes or books that he himself has produced. So it's a real pleasure to have you here tonight, Sanjeev, and I'm going to hand it over to you now. Please join me in welcoming him. Are you mic'd?
So, can you? Okay. Thank you, Alex, for the introduction, and thank you, Simon, for organizing this event. I will take about 12, 13 minutes to lay out some of the messages that are emanating from the book. Before I go any further, I would like to take this opportunity to thank Bill and Melinda Gates Foundation for their support of our project on digitalization and public finances. We believe that this is an important topic for us in the technical assistance that we provide to our member countries. And already we have started to implement some of these areas, some of the advice, which I will talk about in a few minutes. We organized an event in Senegal last year, and then in Uganda in September of this year. And in both these events, we try to see how some of the ideas that came out of the book can be used in helping these countries. The basic premise is that digital technology can have fundamental implications for the way we design and implement fiscal policy. So let me look at the implications of what are the implications of new technologies on fiscal policy. With greater storage capacity and improved computing power, we can now collect a lot more information than before. And indeed, the governments or fiscal authorities are collecting a whole lot of information on the private sector. In fact, if you look at the cases of Australia and the UK, they have access to real-time information on payroll data. And in Brazil and Russia, they have real-time information on firm-level data, firm sales. So, and then the tax authorities are able to process this information with greater ease. With a lot more ease, they are processing this. In the UK, they are able to construct a profile of an individual's income to be able to see how realistic the tax returns are. And in the governments, because they are using a lot of these digital platforms, the tax authorities now have access to all this information which is sitting on different government platforms. So what does this mean for fiscal policy? So as we see it, one of the messages that we want to convey here in this book is that we can do the same things that we are doing, but do them better. And then there are some things that we can innovate, and I'm going to talk about that as well. But all this comes with some new and more intensified fiscal policy challenges, and I'm going to deal with each one of these topics as I move along. So let's start with the peer-to-peer economy that has come up recently, where digital platform intermediates transactions between sellers and buyers of different services and products. Here, one can think of the digital platform providing information to the tax authorities on the users of the platform, such as in Estonia, Uber does that, or it could be that the platform acts as an agent of withholding taxes on behalf of the government. This is what Airbnb is doing for hotel taxes in a number of countries. Of course, this is not appreciated all the time by the private sector, but this is no different from what banks are doing for different financial transactions. Then, of course, with this digital information, there is a lot more ease in having cross-border exchange of information to detect evasion and avoidance of taxes. And then we have the electronic filing of taxes, which has reduced the burden of compliance on the taxpayers, and also the cost of administering taxes for the tax administrations. And with the pre-population of tax returns from third-party sources, it can further reduce the burden of compliance on the taxpayers. And the only thing the taxpayer has to do is to verify the information that is being put in the tax return. Then, of course, the electronic invoicing can help improve the compliance in the case of indirect taxes. And then Alex talked about the use of mobile payments in Kenya. M-Pesa is being used to pay taxes and to pay for government services through the mobile technology. And here I'll take a pause and give some examples of what we found in Senegal and in Uganda. For example, by linking the register of business people with the Uganda Revenue Authority, you can immediately improve the taxpayers register. At present, they are not linked. Similarly, the budget systems, more technically the so-called IFMIS system, produces data on the payments that are being made for the implementation of capital projects. That data is not immediately available to the Revenue Authority. By linking the two, you can improve the taxpayer system. So these are the examples that we found, and these are some things that are inserted in the medium-term revenue strategy for the Uganda that we discussed with authorities last September. In the case of both Uganda and Senegal, we found that there is scope for using mobile phones for paying taxes, and that project is being implemented in Senegal. Sub-Saharan Africa has roughly 600 million mobile phones. The number is supposed to go up to 1 billion in the next couple of years. So there is scope for using this technology for broadening the tax base and easing the compliance burden on the taxpayers. Then the use of biometric identification and digital payment systems has cut bureaucratic inefficiencies and improved targeting and delivery of benefits in a number of countries. And it has also generated some fiscal savings. In the case of India, the Aadhaar is being used for promoting financial inclusion and also for targeting benefits to people, and it has also generated some fiscal savings. Aadhaar is covering roughly 1.2 billion people, and now in the last couple of months they have also announced linking the tax returns to Aadhaar number, and also require the bank holders to submit Aadhaar accounts so that the bank accounts are linked. So there are a lot of different aspects which are being linked to this biometric identification system. Then there is the availability of real-time fiscal data. A number of countries are producing on a daily basis data on value-added taxes and on cash balances. Now that data can be used for monitoring economic activity and better forecasting and preparation of the budget. So there is, and in fact US and Brazil make this data publicly available. So there is scope for going much further with this kind of information. So what are the second point that I want to discuss are innovation, policy design. So what are those innovations in policy design that are possible? So let's look at the tax design. So one could think of designing a tax system which is not based on annual incomes, but on the basis of lifetime income and lifetime wealth. Similarly, one could think of coming up with a individualized value-added tax, which is based on lifetime consumption, and so that conceptually can be a lot more progressive than what we have now. And if we are able to target subsidies better, then some of the blunt instruments that we use to protect the poor, such as zero rating VAT on necessities, will not be needed. But with all these changes that we are talking about comes new challenges, and one of course is when the government is collecting a whole lot of data on the private sector, there is issue of privacy. In a number of countries, these frameworks have not been developed very well or haven't come up yet. And then with the recent episodes of hacking of information from private or government sectors, there's the issue of cybersecurity. The society can benefit from digital technology only and only if they are part of this digital world, and that may not be the case. Finally, you could have some impediments on the institutional side, on the human side, on the political side, which can impede the adoption of this new technology. For example, we have the experience of financial management systems which were implemented in a number of countries, number of developing countries, which were not very successful. So that is again an aspect which one should bear in mind. So two more challenges. We know that number of multinationals are selling in multiple jurisdictions without any physical presence in those countries. So the issue arises, how should you tax them? Should they be taxed on the basis of where the consumers are or where the shareholders are, irrespective of where their physical presence is? And then there is the issue of how should fiscal policy deal with automation? With the introduction of robots, with the capital intensity in the usage of, let's say, robots in some of the industries, we are told that mining now may not be that labor intensive anymore. Does it mean that you need to tax the system differently? And then there is the issue of having some kind of a this benefit, universal benefit, universal basic benefit, which goes to everybody if people are getting unemployed as a result of automation. So last slide, even if digitalization is able to deal with some of the issues that we talked about, it still cannot deal with the fundamental limits, some fundamental issues of fiscal policy. For example, we may not be able to target the benefits to the poor because the rich don't like it or the middle classes oppose it. So you cannot use the digital technology for targeting. Similarly, you may find corrupt bureaucrats bypassing the digital systems and not making use of this technology. And finally, you could have a, then we have the issue of in an ideal sort of tax and transfer system, you want to make sure that the things are not based on one's individual income, but on the initial characteristics and circumstances, and they are not based on some other extraneous circumstances. And the digitalization will not allow us to take care of that. So that brings us to my final comment. So where do we go from here? Digitalization, the technology is changing very rapidly, and in some years, some of the recommendations that we have in the book may appear a bit naive. But the countries have the choices. They can either make incremental changes or leapfrog, as Estonia has done. But then what the book does is to provide a perspective on how the countries can navigate a path through the digital world. Thank you very much.
And that brings us from the first part of this event to the second. So this next bit is going to take place in two parts. So we're going to have two two discussions from the panel, and then we're going to have two sections of the Q&A. And I'm going to try and be really, really ruthless about maintaining the dividing lines between those two segments. So in the first, I'm probably going to fail, but I'll try. I'll say that I'm going to try now. In the first, I would like us to talk at a slightly higher level about, the opportunities and challenges posed by digitalization, public finance. And so talk about, more the theory or kind of big picture stuff. And in the second one, we're going to try and get a bit more specific and talk about specific tax issues and also the role for international organizations. So kind of diving into the specific examples. Hopefully my panel is aware and keen. And so now all that remains is for me to introduce them. So from my far left, we have Patrick Dunleavy, who is a professor at the London School of Economics. And he's been, he's the co-director of the Democratic Audit and chair of the LSE Public Policy Group. So has been doing lots of work on this issue, been thinking a lot about it. Then we have Claire Franklin, who is a partner at Ernst & Young. So she works with the tax functions of corporates as they embrace digital tax topics. So she's really engaged from that corporate perspective. Next, we have Simon Gill, to my immediate left. And he's the head of program here at the Public Finance and Institutions at the ODI. So, IFS ODI rivalry will be put aside for the remainder of this session. To my right, we have Michael Keane, who's the Deputy Director of the Fiscal Affairs. No, we don't. That's Martin. Okay. Well, here's Martin. Martin is the economic advisor to the Prime Minister, to the Prime Minister of the Estonian government. And he really focuses on the big issues, the macro issues. So we'll be talking from that perspective as well. And then finally, we have Michael Keane, the real one this time. And there's only one. Michael is the Deputy Director of the Fiscal Affairs Department of the IMF and has a vast experience of all issues tax. Wonderful. And a general plea to both panelists but also audience members to keep your questions and answers punchy, just so we can get as much in as possible. And again, I'll be brutal if you're too boring. Wonderful. Okay, so first question for Patrick. So you've been studying digitalization for some time. How do you see it as really having an impact? How do you see it shaping the public sector?
The public sector is always 10 to 15 years behind the private sector. So that happens in advanced industrial countries, and it certainly happens in developing countries. And that's a problem because, when you're dealing with tax and regulation, you're basically involved in an arms race. And so if you're 10 to 15 years behind, you're not usually winning the arms race. So whenever I hear a presentation like the one we just heard, my tendency is always to say, don't believe the hype. Particularly don't believe the hype when people mention things like Estonia, which is a tiny little country with 1.5 million people, has an army of 5,000, and so on. In large-scale contexts, in large-scale countries, in big-scale operations, digital change is incredibly hard to do and usually delivers mixed results. Not to say that you can't produce some things that are improvements, but I would always be incredibly skeptical. I've just finished doing a series of interviews with every head of department across the Australian Commonwealth government. And we wrote this up, and it's called Australian Administrative Elites on the Cusp of Digital Change. Now, if that's true in Australia, I would think we're a long way off really high-powered digital change in many developing countries.
So a quick follow-up question. If it's so easy in Estonia and so hard in other larger countries, why is that? Is it just the size and the complexity, or is it...
Scale is incredibly important in digital. You can do lots of things with 1.5 million people that you can't do with 60 million, and even more if you've got 300 million or 120 million like Indonesia or somewhere. India is the one exception. We have the Indian ID card, the 1.2 billion mega project that should never have worked. but somehow seems to have worked a little bit. But I think the jury's still out on that. So I just would say be a little bit cautious. If you look at the advanced industrial countries, they haven't done digital government terribly well. They're still not doing it terribly well. There's a huge way to go.
Wonderful. Claire, can you be a little bit more optimistic? What are the opportunities that digitalisation presents for governments seeking to tax digital activity?
Yes, obviously digitalisation really does bring a real change to the governments and also to the private sector, so the corporates operating within the sort of the new normal. When we think about say tax and the digitalisation of tax and what does that mean, there's sort of two areas that we think about. First of all, what's changed within the provision of services or goods from the private sector that has a digital impact. So, for example, as mentioned just earlier, we have now corporates who are able to have a real access to a global market overnight. They can just sell online, they can be open to any market that they wish to be in without having physical presence anywhere. So much quicker for them to get to market and to be able to, direct where they're leveraging their business. That also brings with it, the sort of implications of how do they produce things digitally. So, for example, if you think about 3D printing, where are you making some of the products? How are the services being sort of put together, which are then sold? So really digital impacts to the business and the supply chain. So that's one side of the discussion. And the other is then, where do you think about taxing this? Where is the profit arising? Where are the costs being deducted from? How do you allocate that? So from a administration of tax perspective, that brings a challenge, but it also brings an opportunity to really think about how the policy around taxing these items can be thought about and changed.
Great. Simon, can we talk? Can you talk for a while about the opportunities that you see for making better use of technology in say financial management?
Let me just give it an example. Actually, I was just picking up what Patrick was saying. I have this strange life that I spend half my week in Scotland and half my week in London. If you're go to a health centre in Scotland or to a hospital in Scotland, because you have a unique health service number, the facilities are joined up. So if I go into a hospital, they pick up my number immediately. It's a bit Patrick's point about scale. You cannot do that in England, but you can do it in Scotland. Scotland's only 5 million, but there are opportunities there in terms of healthcare. It is an issue of scale. I think the other example I wanted to give, I was just thinking in terms of financial management. I was working in Lesotho in 1990. It's not a digitalisation thing, but it was prompted by Sanjeev's comment about using the private sector like Airbnb to collect taxes for you. And in Lesotho in 1990, the oil companies were collecting revenues on behalf of the government in terms of the collection of tax on that. And I think there's lots of scope in that kind of area to get the to get the private sector to work for the government. And I just Patrick, just on your point about being behind the private sector, I think one of the lessons I took out of the book, reading it quickly, is that actually in developing countries, which, Simai, maybe picking up your point, I think the fact that the public sector is behind the private sector is quite useful. I think the steps that M-Pesa has made in places like East Africa, the fact that the public sector can piggyback on some of those developments is a good thing. And I don't think the public sector, particularly in developing countries, should be at the forefront, but they should be maybe a couple of steps behind. I think that's good and useful and is the right way.
Martin, from your experience in Estonia, how do you see the opportunities of this trend?
Well, just let me respond to what was said about the big countries versus small countries. I fully agree that big ships are sometimes more difficult to turn around, but that does not mean that big ships do not turn around. But then you can still have a cruising speed on a big ship as well. But coming now to the Estonian perspective, the one point that I would like to make is that you should not perhaps look at so much on digitalization of a very narrow segment of the economy. You need to look at the digitalization of the whole society. And if you have some segment which is very well digitalized, but on the other hand, you have some registries or agencies which are not digitalized at all, so it's you will not reap the full benefits from digitalization. You need to look at the digitalization on a very broad basis. And what Estonia has been doing, or what is the backbone of our e-society, digital society? It's an X-road. We call it an X-road. It puts together a few hundred different databases, and it makes possible for those databases to speak with each other. So, and on that X-road, there are around 2,000 different e-services have been built. So, e-banking, e-governance, e-elections, e-health, e-education, and so forth. So you need to look on a very broad basis at the digitalization of the society. Secondly, our observations, what makes digitalization successful? I think one crucial issue is to build trust. To build trust in society, it's important. There are issues of privacy. There are issues of cyber security. You need to tackle them. It is also that the government must trust citizens, and the citizens must trust the government. If there is an issue that the digitalization is used, or digital environment is used for patrolling, for spying, then it's not going to work. So it's and there are a number of other issues which, for example, which we think are important, is the ownership of data. In our case, I am the owner of my data. It's my asset. So principally, if I want to, I can determine whom I can reveal my data. If I change my family doctor, then I reveal my data to this particular doctor. Nobody else sees my health record. And furthermore, it's all stored. I always have an access to information if somebody has accessed my and looked into my data. So these are the elements which are, I think, important.
So you might need more data. You need more observations of the observers to generate that kind of trust. Great. Okay, and then finally, Michael. I've got kind of another question about kind of challenges, opportunities. Mm-hmm. Where do you fall on the negative, positive spectrum?
Well, I think on the opportunity side, I think in the book we make try and make a distinction between doing what we do now better and doing different things that we don't think we can currently do. And I think Sanjeev gave lots of examples of the former of doing current things, the things we do now better. Some of these are, of course, already happening. And I think quite a remarkable example is exchange of information, which, again, Sanjeev mentioned, where now we're moving towards automatic exchange of information on taxpayers, which, 10 years ago we just simply think was technically impossible. So I think we are already, I share a lot of Patrick's reservations, and I'll come back to those in a moment, but I think we should recognize that a lot of these things are already with us, and we can see some clear gains. How big they are, in the book we have one paper sort of estimates gains from in a more effective public service delivery, about 1 point of GDP, 1% of GDP, which probably is not a revolution. So I think for the revolution you move to the next topic of what can we do that we can't, what could we be able to do that we can't currently do? Sanjeev mentioned lifetime income tax. I think linking data sets, not just as kind of audit triggers, but actually to use that information to determine tax liability. all kinds of possibilities there. And I think in the book we have a remark by one of the paper cites the CEO of IBM, who made a remark which I find myself thinking about quite a lot. She said that data is the new natural resource. And that's either very profound or going to prove meaningless. I think we're at the point where it's not quite clear to me. But I think that's a real analogy that we have to think through. And that does make you think, well, actually, maybe we're going to think about tax systems in a completely different way. And I think what Martin was saying about ownership of data, information, is going to be critical, including on the tax side. On the challenges, I think some are very well recognized. We know that large, lumpy IT projects have a pretty lousy record, all security issues. And I think the point as well, I think as a tax person, you're very conscious that the tax design is always one step behind. We know that we're going to be one step behind the private sector, and that's not going to change. And I sometimes think we underestimate the bad actors out there in terms of security and illegal and legal things. But I think other things, from our point of view, I think we will always stress the importance of getting IT itself doesn't solve anything. It's all about getting processes and systems right. I think others will know more about it. I think the car tax story in the UK is an example where we moved to paperless vehicle registration fees and compliance went down because one of the bits of paper that we lost was the thing in the windscreen that made us all kind of auditors. That's nothing wrong with the technology. That's to do with saying you have to have a process, you have to have audit, and so on and so forth. I think sometimes, in a second best world, I think sometimes you have to recognize more information is not necessarily better. There was a very interesting paper on Ecuador, which was looking at the use of third-party reporting on company sales. We tend to think improved third-party reporting, we tend to think that's going to be great for compliance. But of course, it turned out not to make much difference because you have when companies revealed their sales more honestly, they simply lied on their costs instead. So it did end up in the same place. I think Sanjeev mentioned this kind of nowcasting, using real-time fiscal data. One of the points the paper makes is that, well, actually you have that for cash. You don't necessarily have that information so quickly for accruals, so you may end up focusing too much on cash. And I think finally all these other constraints just don't go away. We've already mentioned political institutional constraints. Even on the tax side, if we improve compliance, say, with the income tax, one consequence of that is that worsens distortions associated with income tax. So we have to think through what that means. It kind of takes me back a little bit to the redesign question. But overall, I think, and I did want to say, I think the book is I think we're pretty cautious on where we think things are going to go, and maybe we'll talk about that more. But it's clearly going to be a plus. I mean, I think I'm not sufficient Luddite to say that the world's going to be a worse place.